Welcome to Making Money with Laura Sanders, a name you can trust. With over 20 years of real estate experience and selling over 150 homes a year, Laura Sanders is the #1 RE/MAX agent in the state of Florida for 2021. Join us each week as we discuss how to make money through buying and flipping homes, to renting versus selling, and everything in between. To join the conversation, call in live. 888-994-4995, Studio A.
Hi everyone, and welcome to Making Money with Laura Sanders, and I am your host, Laura Sanders. Every week we talk about something that will help you make a little money, save a little money, and help you navigate this crazy little world that we live in. Today we're going to talk about insurance, and we're going to talk about condos and manufactured homes. And we have Brandon with us, and he is from Goosehead Insurance, and we are going to talk about, like, is it easy to insure these properties? Like, I mean, even manufactured homes, like, the date matters, right? Like 1979, I think it changes everything, right? Like,
yeah.
Anything before that, anything after that, like, how does that go?
So thanks for having me, as always.
Yes, thank you for being here.
So manufactured homes, we kind of look at insurance in full in Florida is it's really hard to get insurance. Well, there's only so many companies writing. Now you can just dig in a little bit deeper with manufactured homes. There are even fewer companies willing to write those. I mean, we have hurricanes here. The chances of a masonry home blowing over versus a trailer home or manufactured home is much more likely. And so a lot of insurance companies don't want to write them. So it's difficult. As far as the year goes, 1994 is actually a big year. So Citizens will write them older than 1994, so 93 and older, but 94 and newer they will give replacement cost on, which is what lenders need in order to get a mortgage.
Okay. So but there's difference, right? Because we have some people that have manufactured homes that are like more of like personal property. So is that any different?
Yeah, so there are ratings as far as if it's in like an approved park,
right,
or if it's on your own piece of land. And we're going to rate it differently depending on that, especially from a liability.
But some parks, right, they have it where you're renting the land versus where you actually own the land.
Correct.
So does that change how insurance works?
Yeah, it does. And so those land leases, they're very expensive.
And they can kick you out at any time. Yeah. And then what happens? Because I'm just curious. Like, what happens? Because now here's your double wide. Like, how are you going to pick up a double wide?
Well, one of the questions that's interesting on an insurance application for manufactured homes is, has this manufactured home been moved? They want to know that because think all the plumbing and things inside can get jostled and then could be more likely for a claim.
That's interesting.
They want to know that. The other thing that's important is what are called tie downs. So I have a company that writes manufactured homes, but they want to see proof of that it's skirted so nothing can get underneath.
Okay.
And that they want to see proof of the tie downs into the ground, so it's less likely to go anywhere. Those things are really, really important, especially for hurricane.
So if it's like a fifth wheel, then it's considered just to be like
that's going to be more on the lines of like an auto policy.
Okay. What's better? Auto, I would get, maybe?
Well, a manufactured home is going to be more stable than an auto or a trailer fifth wheel.
Which you have nowhere to say is your actual home base, right?
Yeah,
so that could be a problem.
Yeah, so it's totally different type of policy.
Okay.
What we're talking about is more like a primary or secondary residence.
Okay.
Where if you just park one of those at a campground, that's more like an auto or a trailer policy.
Okay. So what does something cost on something that was like before 1994?
So I had
1993 seems so old.
Well, I was born in 93, Laura, so.
I was at prom while you were being born? Is this what happened? Oh my gosh. Are you kidding me? Okay.
I had one this past week. It was in a, we can talk about protection classes sometime, but it was in a higher protection class and they needed replacement cost on this manufactured home. So it was in the city of Okeechobee, so kind of out in the middle of nowhere. $12,000 for this manufactured home with hurricane coverage.
$12,000 a year
for the year.
for a manufactured home.
12 grand. Now this one had like a pool attached to it, an in-ground pool, and so
Was this like the
carport.
Cadillac of like
No, it
trailer?
wasn't.
No,
I think it was built in 1990, if I remember correctly. So,
$12,000.
but
Where was this? Like what city? Like you said,
Okeechobee.
Okeechobee?
Yeah,
Like $12,000.
12 grand, and a lot of times, I mean, for a kind of run-of-the-mill good.
Put some wheels on it and make it an auto policy, right?
For your run-of-the-mill manufactured home, typically what I see for a good one after 94, usually those are running like 3 to 4K range.
Okay, which is still a lot of money, but for a year, I guess you pay. I mean, God, you don't want to know what I'm paying for my car insurance for 6 months.
No.
Thanks for having children and boys
Yeah, that's expensive.
and an accident.
Yeah, so it is really important to make sure you're shopping around with manufactured homes. The other thing is we talk a lot about 4 points and win myths for single family homes.
Right.
Those things are good to have for a manufactured home, but there's a total different list of questions and way to quote a manufactured home.
What are some of those questions?
We got to know like the serial number, the make,
Because that tells
and the
you
model.
the year. That actually
Yeah.
verifies.
We want to know the length and the width. Does it have tie downs? Is it skirted?
Don't most women want to know the length of this? Sorry, did I say that? I'm just joking. Sorry.
So these are. So I have a whole list of questions that I go through. Is it on a concrete foundation? All of these things play into the rating factors, which come up with the premium.
Interesting.
Mm-hmm.
That is really interesting. Like that, it could be so expensive for something, but I guess, what if like the cost of it? Like, what if they paid $30,000 for it? Like,
Yeah, so that's one of the rating factors is how much is it worth?
So for $12,000, if you're not getting a mortgage, you might as well
just
not have insurance, which
Yeah.
I'm sure a lot of people probably.
Or you get actual cash value. So let's talk about that. There's
Okay,
replacement cost and there's actual cash value.
Okay.
Actual cash value is replacement cost minus depreciation.
Okay.
So let's take a roof, for example. This goes across the board in insurance. These
Oh,
valuation
can we do that with a
methods.
house though? When they say, "Oh, your roof is 25 years old, you only have 5 years left. We want you to get a new roof." Can you do that instead?
So it depends on the loan situation. But
Okay.
for personal property, for structures, for manufactured homes, for condos, whatever it is, there's 3 valuation methods technically. Nobody uses the third one really, but there's actual cash value and replacement cost. So actual cash value is replacement cost minus depreciation.
Okay.
So let's take a roof, for example. Let's say it's a $50,000 roof.
Okay.
And the roof, tile roof, most inspectors or claims adjusters might say it lasts 30 years.
Right.
Now, you have actual cash value coverage, you make a claim. The claims adjuster is going to come in and say, well, this roof is halfway through its life. So instead of giving you the 50 grand, we're going to give you 25 grand.
Okay.
Lenders aren't really cool with that. They want it to
Because
be
they're worried that you can't come up with that money if it comes and now your
Yeah.
property is going to be
Correct.
not taken care of.
correct. Now, replacement cost means whatever it costs to replace that new, they're going to pay it.
Okay.
Same thing goes for personal property. For a couch, if you have personal property coverage. If your couch is a $5,000 couch and you love it, but it's old and it's worn, they're going to come in and say, thing's not really worth anything. So we're not going to give you anything on it if you have actual cash value coverage. You always got to pay extra for replacement cost coverage.
How much difference would that be typically? Like what percentage?
It's hard to give a percentage. It depends on the carrier. You know, that's my favorite thing to say. Depends on the carrier. I've gotten really good at guessing it with Citizens policies because, of course, I write a lot of Citizens policies. But typically, for your average, let's say $6,000 policy, to add on replacement costs, not to add the personal property, because that's a separate charge.
Right.
Because you got to add personal property and then the replacement cost coverage on top of that. Usually it's like $600 to $800 a year
Okay.
additional.
So it's worth it.
It depends. Some people don't like to.
So they're like trying to save $50 a month,
Yeah.
if that, maybe a little more, a little less,
And some people have the view
that they're not going to pay anyway.
they're not going to pay it out. And so I've talked to claims adjusters and people on that side of the industry because I want to have a full picture
Right.
to really know how to protect clients well. And a lot of them say, like, take photos from every corner of every room every 6 months to show what stuff you had in your house in case you had like a fire.
Interesting.
Or you take a video, keep your receipts, those type of things.
Do my credit cards from like, oh my gosh.
Yeah, you got to prove, because you and I both know they don't want to pay you out.
Right.
Their business.
Yeah. Yeah, I had a flood in my closet once.
Mm-hmm.
I really didn't feel like I got a lot for what was damaged.
Mm-hmm.
And yeah.
Yeah, especially if you have like nice shoes, nice clothes.
Yeah, boots that were like leather, the water stains, I mean, that doesn't come out. You can't get that out. Like, and yeah, when I look at what I really got versus what got damaged, and yeah, it wasn't a lot.
You probably had actual cash value coverage.
Yeah, but it still wasn't a lot.
No, they're
Yeah.
you're probably not going to get a ton on that.
Yeah.
So,
But don't worry, I took that money and I replaced it all, and then some, so we're good. We're going to go to commercial, and when we come back, we're going to talk a little bit more about condos. I mean, we talked about the double wides, but let's talk about condos and see how that's going with insurance. I see a lot of rate hikes going on, and people need to understand that as well. So stay tuned. We'll be right back after commercial.
Whether you're buying, selling, refinancing, or building your dream home, you have a lot riding on your loan specialist. Max Fish, a top 1% mortgage loan officer in the nation, will give you a same-day qualifying quote. Max Fish is committed to providing his customers with mortgage services that exceed their expectations. Ensuring that you make the right choice for you and your family is his ultimate goal. Contact Max Fish today at 954-729-6933 or max.fisch@nwmcorp.net.
At JK Closing Attorneys, we do all of the same things that a title company does, but with the benefits of being a law office. We can help with residential real estate, short sales, commercial real estate, refinances, 1031 exchanges, and FRIPTA withholding.
Contact JK Closing Attorneys today at 954-332-3111. Again, that is 954-332-3111.
You have been watching Making Money with Laura. For more information, contact Laura Sanders at 954-650-0827 or visit her website at laurasell.com. And now back to the show.
Hi everyone, and welcome back to Making Money with Laura Sanders. I am your host, Laura Sanders. Today we're talking with Brandon from Goosehead Insurance about navigating insurance when it comes to condos, and it's having to do with, I want to say double wides, but
manufactured homes, Laura.
manufactured homes. Hey, listen, everybody needs insurance, right? So that's something that's been going on. What's a good contact number if people are looking for insurance, though, to reach out to you, Brandon?
I give out my cell phone number. I want people to be able to contact me anytime, and that number is 954-326-9842.
Okay. And if you're looking for what I think is the best realtor,
All-Star.
954-650-0827, or check my website out at laurasell.com. And you definitely don't want to make a move without me.
I love that line.
Don't make a move without me. So condos, right? A lot of people are looking at the maintenance is really starting to like get very boisterous.
Mm-hmm.
And people are saying, oh my God, I'm not going to pay $800 for a condo. And I'm like, but think about it. You're getting your insurance, you're getting your water, you're getting your basic cable, you're getting your internet. Like, I pay just for cable and internet, I think we pay like $300.
Yeah, it can be a lot.
And I don't even think we have the football package anymore with that. I don't watch football, but so I was like, we could get rid of that.
Yeah, so typically, I actually had this conversation today with an attorney that I know, and he's looking to buy a property, and he's been talking about, he's been renting for years and wants to buy a property. And so he said, well, I used to own a home and my insurance went up so much, and now I'm looking at these condos and the association fees are so high, but you save so much on insurance. And I said to him, listen, it's relative. Right. You're going to pay it one way or the other.
Whether it's in a home,
Whether it's in a home.
That's what the rate hikes are for.
Yeah.
So you're going to get a rate hike Like when I bought my house, my insurance was $4,000,
Mm-hmm.
and now my insurance is somewhere, I think it's like $9,500.
Yeah. And my I pay about $7,100.
Yeah. So it's like, okay, well, take that. Like that's what, $5,500 difference? Like divide that by 12. Like that's some serious like extra money a month.
$500 a month, but
Yeah.
that's typically what you're paying in an association fee.
If not more, right? And by the way, I still have my pool, right? I still have to fill my pool when the water starts to dissipate. So normally that would be on the condo to fill the pool, right? Then so you're paying for your pool, you're paying for the stabilizer, you're paying for, you know, to fill the water, you're paying for your water, you're paying for your cable. Forget about your insurance, you're paying for your internet.
Yeah.
Like when it's all said and done, I'm like sitting here saying to myself, like, all right, like what, you know, you guys need to buy a house for me because like I gotta pay all these bills.
Well, and then you can do the same thing on the condo side of like, you're looking at all these little extra things they're covering, but how often are you running into condo assessments?
So I think that's going to calm it down a little bit soon. I think that
Hopefully.
yeah, but you know they got to get up to par because the problem is everybody was voting every year. This is what people don't understand. Every year you were given the chance to vote, and every year what did you all vote for? No reserves, right? Because you said, well, when it comes time to fix something, just bill me then, right? But then nobody went to check to see what needed to be fixed, and nobody followed up on these, you know, these 40-year inspections, these 50-year inspections. Now all this stuff is coming about, and you know, Surfside is a big contributor to what's going on here.
So, you know, I think there's a stat that says something like 70 to 80% of people live paycheck to paycheck.
Yeah, I saw that.
And those are the people running the associations.
Yeah, well, that's the thing. If they can't afford it. So now, I mean, my friend was telling me that his mom, who lives on the beach, like I think she got an $85,000 assessment.
Oh, yeah.
Now, I was like, okay, well, does that all have to be paid at once? Like, some of these places are saying, no, you figure it out. You get a loan, you do whatever you got to do to get this money. And I'm like, so I think, you know, it's like you got to obviously do your research, get your information. Like, I'm trying to ask the same questions like, hey, what is going on in the minutes? What's going on with the association? Like all this different stuff, making sure, because I don't want somebody to say, well, you didn't give me all the information. I'm trying my best to give you all the information.
Yeah. So what's really important is, especially for realtors, and I tell realtors this all the time, when you're looking at a condo or you're listing a condo, looking at the minutes is very important. But getting the master association evidence of insurance is really, really important as well. And a lot of times they just get the liability insurance. You got to ask for the evidence of property insurance. And that's going to spell out what they're covering. Are they covering flood insurance, which a lot of condos do?
Right.
Are they covering windstorm or hurricane coverage? What's the deductible on that? I know you've spoken about that before. If Fannie and Freddie on the loan side, they don't allow for more than a 5% deductible. And a lot of condo associations are raising their hurricane deductible to 10% so they can get a lower premium, so they don't have to do as large of assessments. But then anybody with a mortgage, a regular qualifying mortgage, can't buy in there.
Right.
And so getting that evidence of property insurance up front is becoming more and more imperative.
Every day it's learning something new. Like, so are you in a flood zone?
Yeah.
Do they have flood insurance? Like now I have to ask these questions when I'm on a listing, and then it's trying to explain this to the sellers. I'm like, hey, you don't have flood insurance, but you're in a flood zone. Well, what does that mean for me? Well, you aren't qualified for a conventional mortgage.
Well, you got to get flood insurance.
Even you can't. So the conventionals, Freddie and Fannie will not allow you to get your own flood.
In a condo.
Correct.
You have to have the condos.
Correct. And if they don't have it, so now you have to go non-conforming. And not all lenders can do a non-conforming with no flood insurance. You got to have that person that's willing to write that deal.
Yeah, so flood gets tricky. And you know they're changing the flood map in Broward this summer. Yeah.
Yeah, so what's that going to look like? What?
I looked, they came out with like a rendition of it. I didn't go too
I
far
hope
into
IMAP like updates with it.
Yeah, hopefully in Matrix and
Well,
everything
Matrix, IMAP's within Matrix and what's the other one? I don't use it. Flex. Yeah.
So I only looked at my neighborhood and it didn't change. So
well,
I guess I should have looked elsewhere. But
I know people always. It's funny. So it's funny. You live on the water?
No.
No, you're a dry lot.
Yeah, I'm a dry dock.
Yeah, so, but when you're on like these little canals, right, people always ask me, oh, well, does this flood? It's like, those things have never flooded. They're all run by the water association, like the water district. The water district, when they know it's raining, they reduce the levels. When they know a storm's coming in, they reduce the levels. And then sometimes the levels are reduced just because we're like droughting, like we're not getting enough water. Like right now, we're not in we're getting ready to go into rainy season. So it's like, guys, don't wait to do your roof. Don't wait to do your roof.
And you know, a lot of times, like I'm assuming your house, you got one of those little ducts floating in the back that, you know, stays with the level of water.
That's for my,
and that's
but
for
that's
your
for your
irrigation.
irrigation,
And so as everybody's pulling the irrigation because it's dry, their grass is turning brown.
And eventually that will burn out your duct if there's no water
Yeah.
there when it's pulling for your,
Yeah. So all things to take into account, you know, flood has changed a lot. I quoted a flood policy today. The guy didn't renew his flood. He lives in Marco Island, and he's on the water. He didn't renew his flood. We're supposed to be talking about condos. We're talking about flood. That's okay.
Well, condos need flood.
He didn't renew his flood, and he had a discounted rate, and it was about $1,800. And he's not going to get that rate anymore. Now it's $11,000.
Wow.
Big difference.
Yeah.
So make sure you pay your insurance bills.
Well,
that's
not only
what
that,
happens.
so people don't understand that, is that, for instance, like elevation, when it's a certain way, like especially like Hollywood, Young Circle, elevation is very low, and so the houses aren't on a higher elevation. So I've seen policies at $25,000 for flood. If the person, because a lot of those homes were built in like 1917, 1920.
Oh, yeah.
If those people from 1920 had flooded and they never let it go, those policies, which most people aren't aware of this, hence why the realtors you work with make a difference.
Big difference.
They can be transferred.
Correct. The other thing that's important with flood is you should get a flood elevation certificate, especially if your lot is built up. The companies that typically do surveys, they go out and they do the elevation certificates and they say how built up is your property.
Right.
And the numbers from that, just like a 4.1 MIT, the numbers from that tell us how likely it is to flood, which tells the carrier how to price.
But even like IMAP, which is a service that the realtors have through our Flex and our MLS, it will tell you like how likely storm surges are and what have you. I mean, again, it's not something to replace it with, but it's something for a realtor if you have questions to ask up front. I mean, I can't tell you how many realtors ask me like, oh, is it in a flood zone? It's like, just click on the folio and let it go to IMAP and it will tell you.
Yeah. Well, that's why you're better than the rest.
I didn't say that. I'm just saying. I just, but anyway. So these condos, right? We need to like watch out whether or not they have flood insurance if they're in a flood zone, right?
Correct.
We need to understand that yes, it seems very expensive, $800, but when in fact a house, I mean, my house is what, $1,000 a month. I mean, like, so you're in a condo. I mean, you're getting your water, you're getting your basic cable, you're getting your internet. And sometimes you're getting HBO with that. Like, I don't have HBO at home. Like, you're getting a lot of things. Not to mention, like, you're getting probably a lot of times you're getting somebody at the front desk. You're getting other things.
Security.
Right. So it's like all that stuff adds up. I don't have security at my house.
Yeah.
I am security.
You're paying an HOA as well.
Yeah. Right. That's totally separate. Like HOA, I have a water bill, I have this, I have that. Water's gotten expensive. It's double. It's like at least gone up 25% of what it was before.
I had a water main break at my house.
Nice.
On our daughter's first birthday party, and it was in between the meter and my house. So I had to fix it. I'm responsible for it.
Right.
In a condo, the association's going to take care of that.
Right. And they paid the water bill. So how bad was your water bill when that? Oh, you shut the water off. So.
I didn't have the tool to shut it off. It took me a little bit, about an hour, and it was only like $70. It wasn't terrible.
Yeah, but if that hour went into a day, that'd be a whole different story.
So get that little tool if you have a single family home. It's $15 at Home Depot or wherever.
What does that look like? What's it called?
It's like a T shape. I don't know. I think it's called a water meter shutoff tool.
So it took an hour to drive there during the birthday party and come back?
It was after the birthday party. I had a friend that had one. He went and he brought it.
Oh, okay.
So just getting him over there. But
so if we're looking for an excellent insurance person, since we're running out of time, how would we get you?
Well, I think we need to do condos round 2.
Okay.
But you can always call me on my cell, 326-9842.
Okay, and if you're thinking about moving, buying, or selling, whether you want to move into a place or move out of a place, you're looking to get rid of your ex-dream home to your new dream home, or vice versa, give me a call at 954-650-0827. And thank you so much for listening to Making Money with Laura Sanders. We love that you're listening every week and hope you're learning something from us every week. Thank you, and see you again next week.
Thank you for tuning in for Making Money with Laura Sanders, a name you can trust. To join the conversation, call us at the studio, 888-994-4995 Studio A, or contact Laura directly at 954-650-0827. Laura Sanders, a name you can trust. We look forward to seeing you next